Most beginners in crypto fail, not because they lack money or opportunity, but because they chase hype instead of building a strategy. They see coins skyrocketing overnight, influencers promising quick riches, and success stories flooding social media, and they jump in, hoping to strike gold instantly. But when the market turns, those same investors are left wondering where it all went wrong. The harsh truth is that crypto wealth isn't built overnight. It's built through knowledge, patience, and smart decision-making. Every millionaire investor you've heard about didn't just get lucky. They understood the market, managed risk wisely, and played the long game. While most people panic during dips, the successful ones see opportunity because they have a plan. If you're new to crypto, this video will be your roadmap, a complete beginner's guide to building long-term wealth the right way. We'll walk through the core principles, strategies, and mindset that separate hype chasers from real investors who create lasting success in the crypto space. Welcome to Crypto Education Zone, where we simplify complex crypto topics and help you grow from a beginner into a confident, strategic investor. If you're serious about mastering this space, stay tuned, because by the end of this video, you'll understand exactly what it takes to turn crypto from a gamble into a genuine path to financial freedom. Now, let's take your first real step toward success by understanding what cryptocurrency truly is and how it can become a tool for building lasting wealth. When most people hear the word wealth in crypto, they immediately think of flashy numbers, massive gains, overnight millionaires, and charts that go straight up. But real wealth in crypto isn't about luck or chasing the next viral token. It's about building something lasting, financial freedom, not fleeting profits. True wealth means having your money work for you over time, creating stability, choice, and peace of mind. It's the ability to hold through volatility without fear because your foundation is solid and your strategy is built for the long run. In the crypto world, there's a huge difference between traders and wealth builders. Traders often chase short-term moves, trying to buy low, sell high, and outsmart the market. Some succeed for a while, but many lose because they rely on emotion and timing rather than structure and patience. Wealth builders, on the other hand, play a different game. They focus on ownership, accumulating assets with long-term potential, understanding what they hold, and allowing time to do the heavy lifting. They know that true growth doesn't come from constant buying and selling, but from letting strong investments mature. This is where compounding comes into play, the quiet engine of wealth creation. Whether it's staking rewards, reinvesting profits, or holding assets that appreciate over time, compounding turns small beginnings into massive results. Each reinvested gain becomes another seed for future growth, creating exponential returns over the years. The more patient and consistent you are, the more powerful this effect becomes. Ultimately, wealth in crypto isn't built through gambling. It's built through discipline and vision. It's not about finding that one moonshot coin. It's about creating a system that works even when the market doesn't. When you approach crypto with the mindset of a builder instead of a speculator, you stop chasing hype and start building freedom. Now that you understand what wealth in crypto truly means, let's take things deeper and explore how to identify the right opportunities that align with your long-term goals and set you on the path to real financial growth. The 4 pillars of crypto wealth creation. The first and most important pillar of crypto wealth creation is knowledge and education. Before you ever buy a single coin or click trade, your first real investment should be in understanding how the market works. Without knowledge, every move you make is just guesswork, And in a market as fast, volatile, and unpredictable as crypto, guesswork is a guaranteed way to lose money. The people who build lasting wealth in this space aren't the lucky ones who stumble upon the next big coin. They're the ones who understand why certain projects succeed, how market cycles operate, and when emotions influence prices. This is where education becomes your edge. You must learn to think critically about what you invest in, not just follow trends on social media. That's why we've already created in-depth guides on the 3 key areas of analysis every investor must master: fundamental analysis, technical analysis, and sentiment analysis. If you haven't watched those yet, be sure to check the description section below this video for links to those complete guides. Each one gives you the tools to understand crypto from a different angle. Fundamentals help you identify value. Technicals help you spot timing. And sentiment helps you read the crowd's emotions. Remember, in crypto, information is power, but applied information is wealth. The more you learn, the less you depend on luck or hype. Informed investors make decisions based on data, not dopamine. They research projects, understand tokenomics, evaluate teams, and study market patterns before committing a single dollar. Education gives you confidence in a world driven by fear and greed. It keeps you grounded when the market gets loud. So as we wrap up this first pillar, knowledge and education, understand this truth. Every successful crypto investor starts as a student. Learning isn't optional, it's your first form of capital. Now that you have the foundation of knowledge, it's time to move into the second pillar of crypto wealth creation: smart investing and analysis. This is where we take what you've learned and turn it into strategic action, using analysis, structure, and planning to grow your wealth intelligently in the crypto market. The second pillar of crypto wealth creation is smart investing and analysis, the art of turning your knowledge into precise, profitable action. In the crypto market, where thousands of coins compete for attention, smart investors don't just guess which one will moon next. They analyze, compare, and confirm before committing. This means combining the power of fundamental analysis, FA, technical analysis, TA, and sentiment analysis, SA, to spot strong opportunities while filtering out the noise. Fundamental analysis helps you understand the why behind a project, what problem it solves, who's building it, how its tokenomics are structured, and whether it has real-world utility. This tells you if the project has long-term potential or is just a short-term trend. Technical analysis, on the other hand, helps you master the when, using charts, indicators, and market structure to identify ideal entry and exit points. Then comes sentiment analysis, the psychological layer, reading crowd emotions, tracking market sentiment, and recognizing when fear or greed is dominating. When you combine these 3 forms of analysis, you stop chasing hype and start acting strategically. Instead of reacting to every influencer tweet or viral post, you evaluate the data and make calm, informed choices. Remember, hype fades, but data endures. The projects backed by solid fundamentals, supported by bullish technical signals, and confirmed by healthy market sentiment often turn out to be the most rewarding in the long run. Before you buy any crypto asset, always take time to research. Study the project's white paper, understand the use case, check the team's track record, and assess community engagement. Smart investing isn't about predicting which coin will explode next week. It's about identifying which projects will still matter 5 years from now. As we wrap up this second pillar, smart investing and analysis, keep this in mind. Analysis turns knowledge into power, but discipline turns power into results. You're no longer just reacting to the market. You're reading it, understanding it, and positioning yourself intelligently. Now that we've built the foundation of learning and strategy, it's time to protect what you've earned. The third pillar of crypto wealth creation is risk management and diversification, the crucial step that keeps your portfolio safe, stable, and built to last even through the most volatile market storms. The third pillar of crypto wealth creation, risk management and diversification, is where strategy meets survival. In a market as unpredictable as crypto, even the most skilled investors can lose everything if they fail to protect their capital. That's why mastering how to manage risk and structure your portfolio intelligently is just as important as knowing which projects to invest in. Diversification is the golden rule that separates gamblers from wealth builders. No matter how confident you are in a project, never put all your eggs in one basket. The crypto market can swing dramatically overnight. A regulatory announcement, a major hack, or even social media speculation can send prices soaring or crashing in hours. The only real defense is balance. And that's where the three-layer portfolio model comes in. A simple yet powerful framework to help you stay grounded while still capturing growth. At the top of this model are your core holdings, the bedrock of your portfolio. These are assets like Bitcoin and Ethereum, projects that have stood the test of time and proven their resilience through multiple bull and bear cycles. Bitcoin serves as the digital equivalent of gold, a store of value and market leader, while Ethereum powers an entire ecosystem of decentralized applications and smart contracts. These coins bring stability and long-term strength to your portfolio. Next comes your growth plays, mid-cap projects that combine innovation with solid fundamentals. Think of Layer 2 scaling solutions like Arbitrum or Optimism, or major DeFi protocols such as Aave, Uniswap, or Chainlink. These are the assets that bring higher potential returns because they're actively shaping the future of blockchain technology. They carry more risk than your core holdings, but they also give your portfolio the momentum to grow faster during bullish phases. Finally, you have your high-risk bets, small allocations to emerging or speculative tokens. These could include new gaming projects, AI-related coins, or early-stage DeFi platforms. The key here is to limit your exposure, usually around 5 to 10% of your portfolio. These bets carry massive upside potential, but also the highest risk. Think of them as opportunities, not guarantees, and never invest more than you can afford to lose. When balanced properly, this three-layer structure acts like a financial shield. It allows you to benefit from innovation and market growth without risking total collapse if one asset fails. Diversification doesn't just reduce risk, it enhances opportunity. It ensures that while some assets consolidate or dip, others are rising, keeping your overall portfolio strong and moving forward. The ultimate truth is this: crypto wealth isn't about winning every trade. It's about staying in the game long enough to benefit from the next big wave. Diversification protects your downside while positioning you to capture upside potential. Now that you understand how to protect and grow your capital smartly, it's time to focus on the final and often overlooked pillar of crypto wealth creation: mindset and consistency. Because even with the best strategy and portfolio, your emotions and discipline will ultimately determine your success in this market. The fourth and final pillar of crypto wealth creation, long-term mindset and consistency, is where everything truly comes together. You can have all the knowledge, the smartest investing strategy, and the most diversified portfolio, but without patience and emotional control, you'll still fall into the same traps that wipe out most beginners. In crypto, success doesn't come from chasing quick profits. It comes from holding steady through the storms and staying consistent with your plan. True wealth in crypto takes time, and that's something many newcomers struggle to accept. The market moves in cycles, periods of massive euphoria followed by deep corrections. The key is learning to zoom out and think in years, not days. Every great success story in crypto follows this pattern. Look at Bitcoin, for example. In 2013, it reached about $1,000 before crashing below $200. In 2017, it climbed to $20,000 and fell again to around $3,000. In 2021, it soared to nearly $69,000, then dropped to $16,000. Yet in every cycle, Bitcoin came back stronger, rewarding those who held with conviction and punished those who panicked and sold too soon. That's the essence of a long-term mindset, understanding that dips are part of the journey, not the end of it. Instead of reacting emotionally to every price move, you stay focused on the big picture: adoption, innovation, and blockchain's long-term growth. Volatility isn't your enemy, impatience is. The investors who win big aren't the ones who constantly chase new coins. They're the ones who believe in their research, follow a consistent plan, and let time work its magic. Consistency also means showing up even when the hype dies down. Keep learning, keep monitoring your portfolio, and keep refining your strategy. The market rewards those who stay engaged during the quiet phases, because those are usually the times when the biggest opportunities are forming. Every small, disciplined action you take compounds over time, and before you know it, your steady progress turns into lasting wealth. So remember this: in the world of crypto, patience isn't weakness, it's your greatest weapon. The market will test your emotions, shake your confidence, and tempt you to abandon your plan. But if you can stay calm, focused, and consistent, you'll not only survive the volatility, you'll thrive because of it. Now that you understand all four pillars: knowledge, smart investing, risk management, and mindset, it's time to put them together into one powerful and actionable roadmap for building real, sustainable wealth in cryptocurrency. Here's where everything becomes practical: the step-by-step roadmap to building crypto wealth. This is where we take the principles you've learned and turn them into a clear, actionable journey you can follow from day one. Whether you're just starting or already in the market but struggling to find direction, these 5 steps will help you build lasting wealth with discipline and clarity. Step 1. Learn before you earn. Before putting a single dollar into crypto, invest in your education. Understanding how the market works, how blockchain technology functions, and how to analyze coins is the foundation of everything that follows. Learn the 3 types of analysis: fundamental, technical, and sentiment analysis, because they'll help you identify solid projects, perfect your entry timing, and understand the emotional flow of the market. Beginners often lose money not because crypto is too hard, but because they rush in without knowing what they're doing. Take time to study charts, follow reliable sources, and always question the hype before you act. Remember, in crypto, your knowledge is your most valuable asset. Step 2. Build your first portfolio. Once you understand the basics, it's time to take your first practical step: building your portfolio. Start small and grow as your confidence increases. Use the 3-layer portfolio model we discussed earlier: core holdings like Bitcoin and Ethereum for stability, growth plays like Layer 2s or DeFi projects for innovation, and a few high-risk bets with massive potential but small allocations. Don't try to get rich overnight. Instead, use dollar-cost averaging, or DCA, investing a fixed amount regularly regardless of market conditions. This method reduces emotional decision-making and smooths out volatility over time. Your goal here isn't perfection, it's progress and consistency. Step 3. Manage risk. Even the best portfolio can crumble without risk control. Always remember, protect your capital first, grow it second. Set clear entry and exit points before you buy.
Use stop-loss orders to minimize losses and take profit levels to lock in gains. Never go all in on a single coin or trend, no matter how promising it looks. The market is unpredictable. A tweet, regulation, or security breach can flip everything in hours. Having a plan for both ups and downs keeps you calm and in control. True wealth in crypto comes from surviving long enough to catch the next big wave, and risk management is your lifeboat. Step 4. Follow market narratives. Crypto is driven by narratives, shifting themes that capture attention and capital. One year it's DeFi, the next it's NFTs, metaverse, AI tokens, or real-world assets, or RWAs. The key is not to chase every new trend blindly, but to understand why each one matters. When you spot a strong narrative early, backed by real innovation and adoption, position yourself strategically. Stay informed through credible research and community discussions, but filter out noise and hype. The goal is to adapt intelligently, not react emotionally. In a market that evolves this fast, flexibility and awareness are major advantages. Finally, the true path to wealth lies in compounding, letting your profits grow instead of cashing out too early. Many beginners sell too soon out of fear or excitement, missing the long-term exponential growth that comes from reinvesting. When you take profits, consider reinvesting part of them into solid assets or staking opportunities to earn passive income. Over time, these small reinvestments can multiply your portfolio dramatically. The secret isn't one lucky trade, it's the discipline of letting your money work for you, year after year. Together, these 5 steps form a simple but powerful roadmap. Learn first, build smart, manage risk, follow evolving opportunities, and reinvest with patience. Follow this framework consistently, and you'll not only grow your portfolio, you'll build lasting financial freedom. Now that we've mapped out the step-by-step roadmap to building wealth in crypto, it's important to pause and look at the pitfalls that can easily derail that progress. Because while knowing what to do is powerful, knowing what not to do can save you from painful losses and unnecessary setbacks. Every successful investor at some point learned the hard way that small mistakes can have big consequences, especially in a market as volatile and fast-moving as crypto. From emotional trading and chasing hype to ignoring security and poor risk management, these errors often separate those who grow consistently from those who burn out early. So before we move further, let's uncover the most common mistakes beginners make in crypto and how you can avoid them to stay on the right path toward real, sustainable wealth creation. One of the biggest reasons many beginners fail to build lasting wealth in crypto is that they fall into the same avoidable traps, mistakes that stem from impatience, emotion, and a lack of clear strategy. The first, and perhaps most common, is going all in on hype or meme coins. When newcomers see a token trending on social media or hear stories of others making quick profits, the temptation to jump in blindly can be overwhelming. But what often follows is disappointment, because most hype-driven coins lack solid fundamentals or long-term value. The initial buzz may push prices up, but without real utility or adoption, they almost always come crashing back down. Smart investors understand that chasing hype is like gambling with your future. It might feel exciting, but it's not sustainable wealth creation. Another major pitfall is trading emotionally without analysis. Crypto markets move fast and can be extremely volatile. When prices rise sharply, greed takes over. When they drop, fear kicks in. This emotional roller coaster leads to impulsive decisions, buying at tops, selling at bottoms, and repeating the cycle until the portfolio bleeds. The only antidote is discipline through analysis. Tools like fundamental, technical, and sentiment analysis aren't just for experts, they're your armor against emotional decision-making. They help you rely on logic, not feelings, so your moves are guided by data and probability rather than panic or excitement. Then comes the mistake of ignoring diversification and risk management. Many beginners believe putting all their money into one sure thing will multiply their gains faster, but in crypto, that's one of the fastest ways to lose it all. Every asset, no matter how promising, carries risk. Diversifying across Bitcoin, Ethereum, promising mid-caps, and small experimental plays ensures that if one project fails, your entire portfolio doesn't collapse with it. Think of diversification as your survival plan. It keeps you in the game long enough to enjoy the next big wave of opportunity. Another costly mistake is selling too soon in bull markets or panic selling in bear markets. This emotional seesaw destroys long-term growth. During bull runs, many investors take profits too early, missing out on exponential gains because they're afraid of losing what they've already made. Then in bear markets, fear drives them to sell assets at heavy losses, locking in defeat just before recovery begins. The truth is, crypto rewards patience and conviction. Those who zoom out and focus on multi-year trends, not short-term noise, are the ones who see real compounding wealth. Lastly, forgetting that survival and patience are the ultimate edge is a mistake that quietly ruins more portfolios than bad trades ever could. In crypto, staying power matters more than timing. The investors who last, the ones who remain consistent, disciplined, and patient, are the ones who win big over time. Remember, it's not about catching every moonshot. It's about staying in the game long enough to benefit from the inevitable cycles of growth that define this space. Now that we've seen the biggest mistakes beginners make, it's clear that the real difference between those who struggle and those who thrive in crypto isn't luck, it's habits. The investors who build lasting wealth don't just avoid errors, they replace them with consistent, smart routines that compound over time. Building long-term wealth habits is the antidote to emotional trading, poor planning, and short-term thinking. It's about creating a system that keeps you disciplined even when the market tests your patience. In this next part, we'll explore how developing the right mindset, routines, and strategies can turn your crypto journey from a gamble into a sustainable path to financial growth, the kind that builds freedom, not frustration. Building long-term wealth in crypto isn't about finding one lucky trade. It's about creating habits that keep you consistent, informed, and emotionally stable through every market phase. These habits act as your guardrails, helping you stay focused on your bigger financial goals even when the market gets noisy or unpredictable. One of the most important habits is tracking and reviewing your portfolio regularly. This isn't just about checking prices every day. It's about understanding how your assets are performing relative to your goals. A simple monthly review can help you spot imbalances, identify underperformers, and make informed adjustments before small issues turn into big losses. Next, keeping an investment or trading journal can be a game changer. By recording every trade or investment decision, why you entered, when you exited, and what you learned, you start to recognize your own behavioral patterns. This helps you refine your strategy over time and avoid repeating costly emotional decisions. Think of it as building your personal crypto playbook. Equally crucial is staying emotionally disciplined. The crypto market is designed to test emotions. Fear during dips, greed during rallies. Those who let emotions lead often buy high and sell low. Discipline means sticking to your plan even when your instincts scream otherwise. Set clear rules for yourself: when to take profits, when to cut losses, and when to simply do nothing. And let logic, not panic, guide your moves. Rebalancing your portfolio periodically is another essential practice. Markets shift, and so do asset weights in your portfolio. What started as 50% Bitcoin could easily turn into 70% after a bull run. Rebalancing helps you lock in gains, redistribute profits, and ensure your portfolio stays aligned with your risk tolerance and long-term vision. Finally, commit to lifelong learning. Crypto evolves faster than almost any other industry. New technologies, regulations, and narratives emerge constantly. The investors who stay curious and keep learning don't just adapt, they stay ahead. Follow credible educators, read white papers, and explore new sectors like AI, DeFi, or tokenized real-world assets. Each new insight sharpens your edge. If you were to simplify everything we've discussed into one clear equation for success, it would look like this: knowledge plus strategy plus mindset plus diversification equals sustainable wealth. This simple yet powerful formula captures the true essence of wealth creation in cryptocurrency. It's not about guessing the next coin to moon or trying to time every pump and dump. Real wealth in crypto comes from aligning these four pillars into one balanced system, where each element supports and amplifies the others. Knowledge is your foundation. It's what keeps you from becoming a victim of hype or misinformation. The more you understand the market, blockchain technology, and how different projects operate, the more confident and strategic your decisions become. Without knowledge, every move is a gamble. With it, every move becomes a calculated step toward growth. Then comes strategy, your blueprint for action. This includes having a clear investment plan, understanding entry and exit points, managing your portfolio wisely, and adapting to market cycles. Strategy gives your knowledge direction. It turns understanding into execution. Next is mindset, the emotional engine that keeps you steady. Crypto will test your patience and discipline like no other market. A strong mindset means staying calm during crashes, resisting greed during bull runs, and trusting your plan even when your instincts scream otherwise. It's what separates long-term winners from short-term gamblers. Finally, diversification acts as your shield. By spreading your investments across solid projects and asset classes, you minimize risk while keeping your doors open to opportunity. Diversification ensures that one bad trade or market downturn doesn't destroy years of progress. It's how you protect your growth and stay in the game long enough to win. When these four components work together, knowledge guiding your choices, strategy shaping your actions, mindset keeping you disciplined, and diversification protecting your progress, you create unstoppable momentum. Visually, you can imagine this formula as four interlocking gears, each one turning the other in harmony. If one gear fails, the system weakens. But when all move together, they generate smooth, consistent power. Or picture a balanced triangle, where each side represents one of the pillars supporting your path to financial freedom. Now, let's outline the key takeaways, the beginner's crypto wealth creation. The foundation of wealth creation in crypto begins with a shift in mindset, one that prioritizes education over excitement and strategy over speculation. As a beginner, your greatest asset isn't the coin you hold, it's the knowledge you gain. Focus on learning how the market works, understanding blockchain technology, and recognizing what truly drives value. Profits will come naturally when your decisions are grounded in understanding rather than guesswork. Remember, every successful crypto investor once started with confusion, but they turned that confusion into curiosity, and that curiosity into consistent learning. True wealth in crypto isn't about rushing. It's about building slowly and thinking long-term. The market rewards patience and consistency, not impulse and greed. Instead of trying to get rich in a month, think in terms of years. Set clear goals, create a plan, and stick with it even when the market tests your confidence. Every bull and bear cycle refines your discipline, teaching you that temporary drops don't define your long-term potential. And perhaps the most important mindset shift of all is learning to control your emotions. The crypto market is designed to challenge your patience. Prices soar and crash faster than in any other asset class. But emotional reactions, whether it's panic during dips or euphoria during rallies, often lead to costly mistakes. Detach your feelings from your financial moves. Let logic, research, and strategy guide your actions instead of fear or greed. Finally, embrace volatility as opportunity, not danger. Every crash has created new millionaires, and every bear market has built the foundation for the next wave of wealth. The key is perspective, seeing red days as a chance to accumulate quality assets rather than a reason to quit. In crypto, the calm investor who acts with purpose always outlasts the crowd that acts on impulse. With this beginner's wealth mindset, you're not just investing in crypto, you're investing in yourself. And that's the ultimate path to sustainable financial freedom. At the end of the day, true success in crypto doesn't come from luck. It comes from preparation, strategy, and discipline. Many beginners enter the space hoping for quick riches, but lasting wealth is built by those who plan ahead and stay consistent through every market condition. Preparation means understanding what you're investing in, setting clear goals, and sticking to a structure even when emotions run high. It's about positioning yourself to take advantage of opportunities rather than reacting impulsively to every market move. When you adopt this mindset, every action becomes intentional. Every purchase, every sale, every decision aligns with your long-term goals. Success in crypto, much like in any form of investing, is the result of patience and consistency. It's not about catching every pump or avoiding every dip. It's about learning from the journey and continuously improving your strategy. The truth is, anyone can build lasting wealth through crypto, but it requires belief in the process. You must be willing to learn, adapt, and execute. Even during downturns, preparation turns challenges into opportunities. The ones who thrive aren't those who gamble. They are the ones who plan, study, and act with purpose. With the right mindset and structure, the dream of financial freedom in crypto moves from possibility to reality. If you found this guide valuable and you're serious about building real, lasting wealth in crypto, make sure you like this video, subscribe, and turn on notifications so you never miss any of our deep dive lessons. At Crypto Education Zone, we're dedicated to helping you grow with knowledge, not hype. For those who want to take their understanding even further, check the description section below. You'll find direct links to our full guides on fundamental analysis, technical analysis, and sentiment analysis. These resources will strengthen your foundation and help you make smarter, more confident investment decisions. And as always, remember the CEZ core principle. Knowledge, mindset, balance. That's your edge in the world of crypto.